We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Chris Powell, Secretary and Treasurer of GATA, the Gold Antitrust Action Committee. Thanks for joining me today, Chris.
Oh, thanks for having me, Tom.
So you have covered this subject extensively throughout your career. So the question that I always get back and forth with listeners is why? Why is the gold price manipulated and who does it really serve, Chris?
Gold is manipulated because it is a determinant of currency values. It's a determinant of interest rates and government bond prices. That really is a fact of history going back many, many decades. There's central bank archive material about this. Governments want to control money. They want to monopolize money. The German finance minister made a statement on that a few weeks ago that we published. The governments are going to refuse to give up their monopoly on money. Well, gold is potentially an independent international reserve currency that nobody necessarily can control or issue. That makes it an enormous danger to governments and central banks that want to insist on monopolizing money. I mean, it is a competitor with government currencies. Governments don't want anybody competing with their currencies. It's a determinant of interest rates and government bond prices. The governments want to determine the price of their bonds and they want to determine interest rates. They don't want markets to determine prices. So that's why central banks have always, in the last half century anyway, been striving to control the gold price.
So on your guys' website, gata.org, you wrote there's a certain slide deck, and in that slide deck, there's a little bit of text here, and it says that the world's financial crisis and real estate crisis will eventually produce a credit crisis. Gold is closely related to credit. The implication from suppression, the gold price lies not only in gold, but more so in currencies and the trust behind the currencies. So how is gold leasing in this context used, and what does this tool allow the U.S. to do?
Well, gold leasing has enabled central banks to create a vast imaginary supply of gold. You know, the virtue of gold, it's often said, is, well, you can't print gold, but you can print gold if you're a central bank or a government, and they do print gold. They've done swaps and leases, which GATA has documented for years, to the point that probably most of the gold that the investment world thinks that it owns doesn't exist or is oversubscribed. You can look at the, I think it was a 1979 secret staff report of the International Monetary Fund that admitted that central banks have to conceal their gold leases and their gold swaps because if the market knew what central banks were doing in the gold market, all the values would change. If there's there's only 1,000 ounces of gold in the world, they're worth a lot. If there's 10 billion ounces in people's minds thinking that they own this, but they don't actually possess it, well, then the gold price becomes irrelevant if you create enough imaginary gold, and that's what central banks have been facilitating.
So is there any way to tell how much gold the U.S. actually has? And does it even matter in reality because it's very likely leased out all over?
Yeah, I think you would take a few armored divisions and break into Fort Knox and begin to count it and then audit it. I mean, I am not among those who say there's no gold in Fort Knox. I have no idea if there's any gold in Fort Knox. I think the more important question is ownership. Is that gold oversubscribed? I've always wondered if on Monday the Secretary of the Treasury takes the British ambassador to Fort Knox, says, "Hey, look at your gold," and on Tuesday takes the French ambassador. On Wednesday the German ambassador, and on Thursday the Spanish ambassador. I mean, as long as your gold is in the custody of somebody else. How the hell do you know? I'm sure central banks have some gold, but that secret staff report of the IMF, which we have on our internet site, says that central banks are not going to let the world know the true disposition of their gold reserves, because it would change the whole world financial system overnight if you knew how much gold central banks really had and how much they've lent out, and how much of the gold the world thinks it has is really imaginary or oversubscribed. That information, Tom, is a secret, far more sensitive than the location and disposition of nuclear weapons. Nuclear weapons can only destroy the world, but the control of gold is the control of all the values of capital, labor, goods, and services in the world. And that assertion may sound wild to some people, but that is U.S. government policy. It's in the U.S. government archives, and one of those documents is still on the internet site of the historian of the State Department.
So do we have any way of conceptualizing how many times that this gold could be conceivably leased out?
Yes, we do. There was a hearing before the U.S. Commodity Futures Trading Commission, I think about 10 years ago. I can go look it up, where a metals market consultant, Jeff Christian, estimated that the leverage in the gold market approached 100 to 1. That is, every ounce was being traded 100 times in a very short period. Not long after that, the Reserve Bank of India issued its own report estimating the leverage in the gold market at 92 to 1. Now, suppose the leverage in the gold market is only 50 to 1. I mean, that means, 98% of the world's gold is imaginary. But if it's held in brokerage accounts or with bullion banks who've just issued certificates against it, well, who's going to know? This is the system that central banks long have been facilitating with gold swaps and leases in order to maintain this imaginary gold supply and take gold out of the safe haven picture.
Who's going to know until everybody comes clamoring for their gold, right, Chris?
Yeah, well, a short squeeze, could trigger that bank run, or people could find out just because they get themselves familiar with the documentation that GATA has posted on its internet site. I mean, I can't imagine why anyone right now would want to own gold and keep it with a bullion bank, which is busily engaged in shorting the gold market. I mean, that's really what the gold exchange traded funds, GLD and SLV, do. They short the metals market. They are agents of the big shorts in the metals market. I mean, who's the custodian of the SLV silver? It's JP Morgan Chase. It's very active shorting the silver market. I mean, who is the custodian of the gold of GLD? It's HSBC, another big short. I mean, why would you buy gold and keep it with them? Why would you buy a pool account gold with Kitco or the Perth Mint or anything? It's not allocated to you. It's not any metal you can get your hands on right away, but it's basically a derivative position, and derivatives can be created to infinity. Presumably, people buy gold and silver for investment purposes because they want it to appreciate in value. But if you don't get the right kind of gold and silver, that is real gold and silver, if you get only derivative gold and silver, well, they can create derivatives till the cows come home.
They can create those derivatives till the cows come home, and they can also change the rules really on changing it from unallocated or pooled to allocated and charge all kinds of fees to make that difficult, right? Yeah.
If you can't get your hands on it, or if you don't have complete trust in the company that is vaulting your metal, you probably just shot yourself in the foot. You've just thrown your money down the toilet because you have not really purchased real metal, and you've not taken any real metal off the market.
So, Chris, I want to go back to something you said. You were saying that, for example, GLD or SLV are the ones that are actually shorting the market. And there was a recent interview, I'm forgetting the gentleman's name, that was interviewed. And there were a lot of people that were saying he misspoke. So do you think that it's necessarily the ETF itself that's shorting the metals, or is it more the custodian as an indirect relationship that's shorting the metal?
The fellow you're thinking of, I think it was Jeff Curry of Goldman Sachs.
Yes.
And, he made this comment that SLV, as I recall, was going short the silver that it was purchasing for investors. Now, I don't know if that's exactly what's happening, but I do know that the major exchange traded funds, GLD and SLV, are set up so that only what are called authorized participants can get their hands on the real metal, can trade it, withdraw it, put it in. And you can become an authorized participant only if you're approved as one by the fund, and if you're dealing in, I think, something like 100,000 ounces or contracts at a time. As a practical matter, ordinary retail investors cannot make trades through that fund to get real metal. Since these EFTs or ETFs rather are products of the big bullion banks, and the big bullion banks are the agents of the central banks in the gold market, I don't think they have the interests of retail investors at heart. They have the interests of governments and central banks at heart. They are part of the system that I think is providing metal to hotspots when there's a shortage, so that things don't get out of hand. If you want to work with government agents in buying your metal or investing in what you think is metal, you're just hurting yourself. You're throwing your money away.
Mm-hmm. So, Chris, tell us about how the Comex was basically explicitly created for the purpose of really having a tool for these bullion banks to use for the basically the purpose of manipulation. Well,
Nixon closed the gold window in 1971. There was turmoil in the market again after. In I believe 1974, the gold futures market was created. There's a very telling cable from the U.S. Embassy in London to the State Department in Washington back in the weeks just prior to the creation of the U.S. gold futures market. The chief of mission, I believe, is the one who wrote the cable in London, conveys that he has surveyed the bullion banks in London about the creation of a gold futures market in the United States, and that the bullion banks had assured him that if the futures market in gold was created in the United States, they would be able to inject such volatility into that futures market that it would likely scare retail investors away. Now, that doesn't exactly prove that the futures market was created to scare retail investors away or to control the price, but it's a very powerful suggestion. Now, that memo, I believe it was one of the memos that WikiLeaks found, may have come out another way. I'd have to go look that up, but that memo is from the U.S. Embassy in London to the State Department in Washington. That is on GATA's internet site. It's one of the dozens of documents we've posted about gold market manipulation. And, I think it would certainly give reasonable people some suspicion about the purposes of the gold futures market.
So, Chris, what do you think about the move of gold from west to east? Could this be also leading to a shift in power as well?
Well, many people think so. I think that's a very plausible understanding of the situation. One of the documents that we have that's among my favorites is the transcript of a conversation between U.S. Secretary of State Henry Kissinger in his office at the State Department with one of his undersecretaries, Thomas O. Enders, and it's about gold's role in the world financial system. Enders is explaining to Kissinger why the United States has to discourage its European allies from making gold more important in their national foreign exchange reserves. Enders explains to Kissinger that the Europeans now collectively, and this is in 1974, have more gold reserves than the United States. And whoever has the most gold, Enders tells Kissinger, can revalue it from time to time, control its value, can reprice it. And in doing so, reprice all the currencies and other financial values in the world, which is an enormous power, and a power that the United States then was enjoying, and which Enders told Kissinger, we got to keep. So we got to prevent the Europeans from remonetizing gold in any way, because it'll change all financial values, including the value of the dollar. Now, I think, those circumstances have not really changed. The United States has always pushed for keeping gold out of the financial system in deference to the dollar. Here's Enders telling Kissinger that, this is our policy and it must remain our policy, or the United States is going to lose a lot of power in the world. Well, look, we know that the Chinese know this. We know that the Russians know this. Why do we know the Chinese know this? Because the WikiLeaks cables from the U.S. Embassy in Beijing to the State Department of Washington contain the transcripts of Chinese government-controlled news organization reports about gold market rigging by the United States. The Chinese know that the United States has always tried to knock gold down to keep the dollar the world reserve currency. This is explicit in these Chinese news organization reports, translated by the State Department's embassy in Beijing and cabled back to Washington at the State Department. Well, these cables show that not only do the Chinese know that gold is the controller of the financial system, but the United States knows that China knows. Back, I think, when was it? I think 2004, the then deputy chairman of the Bank of Russia, Oleg Mozaiskov, gave a speech to the summer meeting of the London Bullion Market Association at the Kempinski Hotel in Moscow. The only words in English he spoke were Gold Antitrust Action Committee. That was very strange to us, because when we found out about it, we realized, hey, wait a minute, we never knowingly had any contact with anybody in Russia or anybody who spoke Russian. We heard about this. We asked the LBMA for a copy of the speech. The LBMA refused to give it to us. But I looked up the Bank of Russia on the internet, and I saw that they were at 12 Neglinaya Street in Moscow. They had an English section of their internet site, and they even listed a fax number. So I wrote a letter and I faxed it to Mozaiskov saying, hey, we heard you gave this speech to the LBMA a few weeks ago, and you mentioned the Gold Antitrust Action Committee. Could you provide me a copy of that speech, because the LBMA won't give it to me? And I told them that, a copy of the Russian text would be just fine, because I was a newspaper editor then, and I had a Russian-speaking graduate student on my staff. I said, we can translate it. Remarkably, Mozaiskov got back to me within a day saying that he would be very glad to give us a copy of his speech, but he wanted to control the translation. Apparently, it was very sensitive to him, so he said he would have his friend, the chairman of Moscow Narodny Bank in London, do the translation. And a month went by, and I did get the translation from the guy in London, and sure enough, here's the deputy chairman of the Bank of Russia talking about the Gold Antitrust Action Committee in a speech to the bullion bankers who've come over from London. I think what Mozaiskov was saying, again, this text is on our internet site. You can look it up. I can find it for you. But Mozaiskov said to the effect that, many of you who've heard of the group of economists who came together to form the Gold Antitrust Action Committee. Well, this is pretty funny, because I'm a college dropout. Our chairman is a former football player, and I'm not sure we could spell economist at the time. But anyway, Mozaiskov said that we had shown that the the movements of the price of gold did not necessarily conform to the ordinary laws of supply and demand. And that, there were some strange things going on here. I think this was the Russians' way of telling the London bullion bankers that Russia was now on to them, that Russia now knew that London was the center of gold price suppression, that, their derivatives were helping to keep the gold price under control. And sure enough, simultaneously, Russia began withdrawing the gold it had deposited in London and brought it back to Russia. Now, we know the Russians and the Chinese know all about the gold price suppression scheme, so that it's been Western central bank policy for decades. And we know that the United States knows that China and Russia know all about this scheme. But the public doesn't understand it. Retail investors don't understand it. Hedge funds probably don't understand it. China could pull the plug on this at any moment. Your question was about power. Well, China knows that gold is control over the world financial system. China apparently is not ready yet to pull the plug on it by announcing that it has, 10, 20,000 tons of gold, and it's going to make the UN convertible to gold. I don't know exactly what they're going to do, but your question was, is gold power? Is this movement of gold from the west to the east a symbol of a shift of power? I'd say if you read the U.S. government archive on this, you'd have to say yes, it is. I don't know what the end game is here. I know a couple of U.S. economists, Paul Brodsky and Lee Quaintance, I think 8 years ago, 2013, wrote a paper not claiming that it was anything beyond speculation, but Brodsky and Quaintance hypothesized that the real plan of the central banks worldwide was to redistribute world gold reserves among them so that countries that were overweight US dollars in their foreign exchange reserves would be hedged with gold upon the inevitable devaluation of the dollar. I always thought that was a very, very plausible hypothesis for what's going on here. Brodsky and Quaintance thought that the central banks wanted to keep the gold price under control in these years when they were redistributing the reserves, because if it got out of hand now, the gold wouldn't get to where they wanted to put it in time. I suspect what is going to happen is something along the lines of what Brodsky and Quaintance hypothesized, that when the central banks get the gold where they want it to be, where they think it's relatively fairly redistributed, they will revalue gold upward as part of an international currency revaluation, and in doing so, devalue their own currencies, especially the dollar, and they will come out ahead because the increased value of gold will compensate for whatever that they've lost. A Scottish economist, Peter Miller, wrote something fairly similar, I think a couple of years before Brodsky and Quaintance. He said that the nature of a fiat currency system, built on debt, required that system to revalue the monetary metals upward from time to time in order to devalue the debt and to prevent the debt from consuming the natural economy. If interest goes exponential, as it does eventually as a mathematical progression, then all of a sudden you've got no economy left. You're just paying interest. The Scottish guy Miller wrote that every few generations you've got to have a jubilee of sorts. You've got to devalue the debt and start all over again. And that central banks indeed had done that by devaluing their currencies, by upvaluing gold. I mean, look, that's what President Roosevelt did in 1933 and 1934. He devalued the dollar and did it by upvaluing gold. Just unfortunately for many gold holders, he did it after he took their gold away.
I want to go back to something you said there, Chris, about China pulling the plug. Is this, in your opinion, do they just have to announce how much gold they have, or would they also be, let's say, taking delivery, physical delivery from the Comex or another source?
Well, I think even an announcement that their gold reserves were much higher than they've officially reported to the IMF would have an enormous impact. Now, I would be surprised if China or any government goes to direct convertibility of their currency to gold at a fixed rate. Governments don't want that. That gold is a very strict restraint on governments, but they could use it to support their currencies. They could do it by trading currency, by trading gold for currency in the open at a price that they were controlling. And as Enders told Kissinger in April 1974 at the State Department, that kind of open gold trading would change all financial valuations in the world, and the United States had to prevent it. China probably does not want to pull the plug on the system right now because it has far more U.S. dollars in treasuries in its foreign exchange reserves than it has gold, at least at current valuations, even if they have a lot more gold than they say they have. I don't think China yet could revalue gold upward without also devaluing its U.S. dollar and treasury reserves. Any country that has a fairly substantial foreign exchange reserve could sabotage the system tomorrow by selling treasuries and buying gold. That would explode the system. That's why I tend to believe the Brodsky and Quaintance hypothesis that all the central banks are in on this right now. And eventually we will have an international rearrangement of the financial system. Maybe it'll involve the special drawing rights of the International Monetary Fund that incorporates gold in a new basket of currencies that make up the SDRs. I don't know, but I'm pretty confident that all the major central banks are in on the gold price control scheme right now. I just think it's a deceptive, deceitful, totalitarian system because it requires the fooling of investors. It requires the deception of investors. It's undemocratic. If you believe in democracy, if you believe in free markets as the engine of human progress, then letting central banks determine the values of all capital, labor, goods, and services in the world undemocratically, secretly, without any accountability to anybody. That's a totalitarian system.
Chris, I want to go back to another thing that you mentioned there towards the end, and you were talking about the gold confiscation. So in 2007, you wrote that confiscation has never seemed to GATA to be a serious or imminent threat. Has your feeling on that changed recently?
No, I don't think so, Tom. I had some fairly extensive correspondence with the Treasury Department a few years ago trying to get out from them what is the Treasury Department's policy on confiscation. I had to enlist my congressman eventually to prod them to answer me, but I got a letter back eventually, I think, for the Undersecretary of, I think it was the Treasury for Foreign Assets Control, and basically he told me that under the Trading with the Enemy Act of 1917 and the Emergency Economic Powers Act of, I think, 1977, as amended, the Treasury Department claimed the power upon proclamation of an emergency by the President of the United States to seize or freeze gold and silver related assets. But he told me not to worry too much because under the same two statutes, for the proclamation of emergency by the President, Treasury Department claims the power to seize or freeze any goddamn thing it wants to. So, that's kind of a totalitarian system too, where it's ready to go. I don't think I don't think seizing or freezing gold and silver, the monetary metals, just for their own sakes would work, because central banks, I think, are going to use gold, as they've used it in previous years, for a currency revaluation and a debt devaluation. And that wouldn't work if central banks and governments were the only ones who had metal. Gold and silver can do that job only if they're exchangeable with corporations and the public. If central banks and governments take gold and silver completely out of the system, well, then they're really not much use to the governments themselves, unless they're just going to trade them among each other. But eventually, values are assigned and wealth is created by populations at work, and you'd have to exchange that metal with the people who are doing the real world work to keep the world rolling on its axis. So I'm not terribly scared about confiscation. It could happen again in the United States, but I think the rest of the world would laugh at it. The rest of the world is not thrilled with the dollar these days. The rest of the world fully understands that the dollar is the primary mechanism of U.S. imperialism in the world today. The U.S. dollar is controlling all prices and currency values right now. The world understands that's not a fair or democratic system either. If the United States tried to neutralize gold, I think the rest of the world would only take it up more. It's the way out of the current system. It's the mechanism that you can use to develop another world reserve currency.
So in that, Chris, you also mentioned silver. Don't you think that just simply because of the logistical considerations around silver, that would make it much harder to confiscate as well? Yeah,
well, silver is much more an industrial metal. I mean, central banks probably have still some gold left, and gold is primarily hoarded as money. Silver is industrial; it's always being consumed, but I think it still retains its monetary functions as well. It's not all kept in one place or as many places. It's in as few places. It's distributed more widely around the world. I think it's a fairly good substitute for gold right now. Insofar it's tangible, it's rare, it has all those qualities of good money that, who was it? Aristotle, one of the ancient Greeks, spelled out. There's a lot of people on our side, Tom, who think that silver is central banking's kryptonite, that it is harder for them to control than gold, because they haven't had as much of it as gold. Back when President Johnson signed the Coinage Act of 1965, and this statement is on GATA's internet site as well, Johnson warned, I think, what he called speculators, that just because the silver was being taken out of the U.S. currency, it wasn't going to go up in value, because the U.S. had a strategic silver stockpile from which, the president said, the U.S. government would dishoard as necessary to keep the price down. Now, that stockpile has been exhausted since 1965, but that statement, I think, is so profound for establishing that silver is monetary and that governments have a powerful interest in controlling the price of silver. It's only speculation on my part, but I long have thought that the silver hoard that J.P. Morgan has amassed in recent years has been amassed at the behest of the U.S. government to recreate a U.S. government silver reserve, precisely for intervention purposes as imagined by Johnson in 1965. Jamie Dimon, the CEO of J.P. Morgan Chase, and his former commodity desk chief, Blythe Masters, made some comments a few years ago insisting that J.P. Morgan was not trading the monetary metals for its own accounts, but was doing it for clients. Unfortunately, of course, no financial news organization asked Diamond and Masters, do those clients include the U.S. government? All you have to do is, I wish I could find one financial news organization, mainstream organization, that was willing to put a few simple, critical questions to governments and central banks. I mean, I tried doing it the other day with the Bank of England. I sent them a note saying, hey, have you guys been leasing gold or swapping it in the last year, or have you been calling in gold leases or swaps? And I did get an answer. They do answer me from time to time saying that, no, we don't have anything to say on this point. So, I mean, what do you want? I mean, this is conspiracy theory. You want to know what's going on in the monetary metals markets? Don't ask me. Ask the goddamn central banks.
Yeah, it seems like their answer is more telling than anything, right?
Well, of course it is. But, I can't even get a mainstream financial news organization to note that. After a few years of effort, a few years ago, we finally got the Wall Street Journal to do a story about our complaints that the Federal Reserve was involved in gold leasing. It took a year and a half. I got very tired of dealing with the reporter, and I kept telling him, look, don't ask me. Call the Fed. Call the Treasury. Ask them what they're doing in the gold market. I can give you these documents that show that they've been involved, but ask them. Well, they finally did a story, and they quoted 4 or 5 GATA supporters to whom I had introduced the Journal's reporter. They put it on the front page of the Wall Street Journal 2 or 3 years ago, and raised the question: is the Fed leasing gold? But they didn't do something. They refused to ask the Fed, what are you doing? Are you leasing gold? Are you involved in the gold market? Or at least there was nothing in the Wall Street Journal story about a comment from the Federal Reserve or the Treasury Department. The first rule of journalism, and I've been in it for 50 years, I've heard of it anyway, is if you accuse somebody of doing something or you repeat an accusation against somebody, you go to that somebody and ask him for a response. The Wall Street Journal puts this story on the front page, reporting accusations that the Fed is diddling in the gold market. And the story doesn't say whether the Journal ever asked the Fed for comment. Well, doesn't that tell you something, that this issue is a little too sensitive for ordinary journalism? Now, maybe the Journal did ask the Fed about this, and somebody at the New York Fed said, gee, if you really want to press this question, we're not going to invite you to our Christmas party anymore. And, we might talk to our friends at J.P. Morgan and Goldman Sachs and Morgan Stanley and Citibank about all the advertising they're doing in your paper. So, don't think that there's any special integrity in mainstream financial news organizations. They will violate the first rule of journalism in order to protect government intervention, secret intervention in the gold market.
So, Chris, in that same article that you wrote about confiscation and your considerations around it, you also mentioned capital controls may be imposed in the U.S. in the next currency crisis. So what could these look like, in your opinion? Well,
you can't wire money out of the country. You can't do foreign exchange transactions without the government approval. You can be very restricted in the banking you can do internally in the country. It's really one reason why I don't think that to stifle Bitcoin, governments would have to shut the internet down. No, they wouldn't. They would just have to control the bank transactions between Bitcoin and any local fiat currency. Until you're going to be buying things directly with Bitcoin, and we're not at that point yet, you need to convert your Bitcoin into your local domestic government currency and do your commerce in the government currency. Well, if the governments tell the banking system, no, you can't process Bitcoin transactions anymore, or say we're going to put a 50% tax on them or something like that. Bitcoin is very easily controlled. But since gold has a tangible presence, a reality, a physical reality like silver, it's much harder to control the real metal. People can carry it and engage in financial transactions face to face as they used to do with the monetary metals. So I still think gold and silver are much greater competitors to government currencies than Bitcoin will be, at least until everybody can convert somehow Bitcoin into a local tradable mechanism at Stop and Shop.
So it seems at times the manipulation of the metals is used to counteract news. We're speaking today on Tuesday, April 13th, and we saw the metals get smashed yesterday down, seemingly on no news. So what is it they could possibly be trying to counteract right now?
Well, I wrote a dispatch this morning speculating for an answer to the question people were asking yesterday. Gee, why are gold and silver being knocked down so hard today? There's no real news relative to them. But I think it was obvious. Even yesterday and the day before, there were mainstream financial news organization reports saying that this week's inflation report was going to be horrible because it was going to be comparing prices from this March against prices from last March when everything was going down the toilet because of the epidemic. So the prices were very depressed a year ago, but now they're coming back, and the disparity is going to be emphasized by what the epidemic did a year ago. These stories were in the news for the last 72 hours. There was a story on Bloomberg yesterday that I dispatched to our list saying that the inflation report is going to be terrible. That was yesterday, and yesterday they smashed gold and silver. Well, it occurred to me today, well, of course, that's why they did it yesterday. If they did it today, simultaneously with the explosion in inflation, the anomaly, the counterintuitiveness would have been off the charts. Somebody might have asked, how can gold and silver go down today when inflation is exploding at a 12% annual rate? Somebody would have asked a question. But anticipating the terrible inflation report yesterday, okay, we'll smash it yesterday so that when it recovers today on the inflation report, it's only right back where it was last week. No damage done. Now, this is just speculation. But again, if you don't want to believe me, call the New York Fed, call the Treasury Department, call the Bank for International Settlements, call the Bank of England. Ask them, could we see your transactions in gold over the last few months?
Chris, you mentioned the government really trying to control interest rates earlier in the conversation. So what do you think the difference is between explicit and, let's say, covert yield curve control?
Well, we have covert yield curve control right now. I mean, that's what gold price suppression is. Gold price suppression is aimed largely at controlling interest rates. There's a historic inverse relation between the gold price and real interest rates. If real interest rates are high, ordinarily in a free market, the gold price is low. If real interest rates are low, ordinarily in a free market, gold prices are high. There was a paper written by Larry Summers, who was professor at Harvard before he became Treasury Secretary, and another economics professor written, 30 years ago, about the relationship between gold and interest rates. It was called Gibson's paradox and the gold standard. It seemed to imply that you could have your nirvana of perpetual low interest rates if you could get control of the gold price, because that's what the relationship between gold and interest rates had been throughout history. And indeed, when the gold carry trade was invented during the Clinton administration, that was a matter of interest rate control. What happened? Central banks began leasing gold into the market. Bullion banks took the leases and sold the gold, drove the gold price down, and simultaneously with the proceeds of the leased gold, the bullion banks bought government bonds, U.S. Treasuries. So what did gold leasing do when the gold carry trade? It depressed the gold price, and it raised government bonds prices and reduced interest rates. It was a lovely profit-making sure thing for the big banks until they ran out of metal, until central banks stopped leasing gold or suddenly realized, gee, we've all been doing this and there isn't all that much gold left. And that's really why the Bank of England announced the sale of its gold back, 99 or so, to bail out the bullion banks. But the gold carry trade was a mechanism of yield curve control. Sell gold, buy treasuries, knocks the gold price down, knocks interest rates down, drives government bond prices up. This is a very old game.
Chris, how far do you think we are from seeing, let's say, explicit yield curve control?
I don't know if they need to be explicit. Maybe if they ever go explicit, it's really because the market is getting away from them. For the last year, there have been many strange events in the gold market suggesting that there's great strain on the market. The disparity now between retail coin and bar prices with futures prices is as extreme as I can recall it. Ordinarily, those disparities reduce over time when the central banks get things back in hand again, but it's taken them a long time. This has been going on for really a year now. I don't know, Tom. There are strange events that can happen. If China's mad at the United States right now, well, it could pull something in the gold market in order to yank the U.S. government's chain. Some government, some central bank could defect from the price control scheme. Or they could just run out of gold. There's indications that metal is short, both gold and silver at the Comex. There's big physical deliveries coming out of the Comex in the last few months. That never happened before. Comex was always a paper market. Now it's becoming a physical market. I don't think that's their idea of a good time. They don't want to see, metal leaving the financial system into private hands outside the system. I don't know. I may not live to see the day. I know a lot of brilliant people who are on the gold side who saw what was going on and wrote about it and expected that this couldn't go on forever, and it went on longer than they lived. I don't know. I try not to make predictions. It's hard enough for me to persuade people to look at the documentation, which is as long as your arm, and to put even a simple question to the people who know. And it is very hard because really almost everybody on this planet, Tom, who has any power has been bought off.
And of course, Chris, you have exactly as you're saying, there's a ton of documentation on your guys' website, GATA.org. Tell us a couple of the, let's say, documents on there that are maybe worth highlighting for somebody that's going to your site for the first time.
Oh, well, we have statements by various central bankers through the years who acknowledged the gold price suppression scheme. One of my favorites is a speech given by William R. White when he was head of the Monetary and Economic Department at the Bank for International Settlements in Basel, Switzerland. He gave a speech on, I think he called it the five main purposes of international central bank cooperation. And, one of these was to influence gold and asset prices when this was, in circumstances when this is thought to be useful. Another great BIS document we have on our internet site is a PowerPoint presentation that the BIS gave at a meeting at its headquarters in Basel a few years ago, trying to recruit new central bank members for the BIS, and it listed the services of the BIS to its central bank members. And the PowerPoint presentation shows that one of its services to its central bank members is secret interventions in the gold market. I mean, what do you want? I mean, here's the BIS PowerPoint, for Christ's sake. It's stuff like that. There's memoirs by central bankers. Paul Volcker's autobiography, both the early edition and the late edition, note that when he was Deputy Treasury Secretary, he wanted intervention in gold to be undertaken in order to support a general currency revaluation, and that was not done. The German financial journalist Lars Schall got a hold of Volcker a few years ago before he died, and asked if he thought that central banks should intervene in the gold market, and Volcker told him that, well, in emergencies they have to. The former president of the BIS and the president of the Dutch Central Bank, Gilles Zylstra, in his memoirs, he wrote that the gold price was always suppressed by Western central banks at the behest of the United States. This has been out there for many years. Got the French central bank official admitting that they're secretly trading gold for their own account, and other central bank accounts virtually every day. I mean, I would just urge people, go to GATA.org. And in the top left column, there's a page called The Basics. You open that up, and at the top of the Basics page is a very long summary of gold price suppression history and objectives that I recently updated for a conference in Nigeria. Many of the major documents are contained in that presentation. We have links to them. Also in the left column of the GATA Internet site, there's the general documentation file. People can go into that and just scroll through it to open up what is of interest to them. But why anybody calls this conspiracy theory? I mean, it's just disrespectful. It's demeaning. It's deceptive. Government operates largely in secret, and when people get together to decide on a course of action and then implement it in secret, that's the definition of conspiracy. Well, so there's not just conspiracy theory, there's conspiracy fact, and there's a reason why you and I are not invited to the monthly meeting of the directors of the Bank for International Settlements in Basel, and we weren't going to be invited there even before the epidemic got in the way of travel. And there's a reason why we're not invited to the monthly meetings of the Federal Open Market Committee in Washington, and why the transcripts of those meetings are not available immediately. The reason is they are doing things in secret they don't want the markets to know about. They are doing things to deceive investors. They are doing things to undermine democracy. And, to label conspiracy theory, any criticism of these ways of doing business, it's just contemptible.
Excellent, Chris. Well, I think that's a great place to wrap up. Do you have any final thoughts as we conclude here? Well,
I encourage people to go to our internet site, and I think in the right column you can enroll for our free daily dispatches that are of interest to people in the monetary metals sector. There's no charge for it. You can subscribe and unsubscribe on your own there. We like to stay in touch with people that way. We are a 501c3 organization under the U.S. Internal Revenue Code, which means we're federally tax exempt, and it means that we can receive contributions from people who can claim tax deductions for them. You can go to the How to Help page on our internet site, and if you're so inclined, see how you can support our work with a credit card donation or mailing a check. We even take Bitcoin now. We got a really a business partner in Texas. He runs a winery, he is selling for us this GATA labeled wine. He's always bugging me to promote it, and I keep forgetting to do it. So there it is. You can buy a case of GATA labeled wine from him, and we get commissions off that. And I encourage people to buy a bottle, and let's toast to a free gold market.
That was actually on my list of things to wrap with, Chris. Thanks for beating me to it.
You'd kill me if I didn't do it.
Well, it looks like some good stuff. Chris, thanks so much for your time today. Really appreciate it.
Oh, thank you, Tom, for your interest.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.